tax season. We are in full swing, and Alan Rowell from the Accounting Place is back. We're going to talk about the two inevitable things in life, taxes and death, because there are big changes when someone in your family passes away, big changes to the tax.
There are huge changes, and one of the biggest issues here is that individuals who are looking after that estate don't really understand what's all involved a lot of the times. One of the things that, the idea is to understand who owns what when. Okay, so when an individual passes away, the Income Tax Act says that everything that they own is deemed to have been sold as of that day. So you pass away, everything is sold, and it's sold to the trust. Now, unfortunately, what that means is everything is sold at fair market value, which means everything gets taxed. Okay, so RRSPs, retirement funds, real estate, investment portfolios, everything hits the tax return as of that date.
And this is even if you've got a will where maybe you have a surviving spouse and everything gets transferred to them?
That is the one exception to it, is a surviving spouse. Now, one of the things that you do, though, or can be done, is depending on the date of death and different things like that, passing to the surviving spouse only defers that taxes off further.
Right.
So if an individual passed away in January, for example, it's easy to put a lot of income onto their return in that final return and play the rates a little bit. Keep those rates down. The will still pass the funds to the surviving spouse, but what will end up happening is it'll be passed tax-free, or tax-paid is probably the better term.
Because you have to fill out, for someone who's passed away, you have to fill out what's called a final return, which sounds so ominous.
It does, doesn't it? It sounds scary, but that's because of the deemed disposition. So the year of death, so 2022, for example, somebody passes away, that's the last tax return they're going to file. Everything after that becomes a trust return. So it goes to the estate. The trust is the purchaser of all those assets from the individual. So the trust now will pay tax on income earned after death on those assets, while all the paperwork and the lawyers and everything else is all involved. They'll pay tax on that investment income and whatever happens up until such time as everything is arranged, and then it goes to the beneficiaries. So there's three actual steps there. And with the trust, they actually give you 3 years to clean up the trust and get ready to disperse the funds using the minimum or the regular individual tax rates, as opposed to a trust tax rate, which gets to 53.4%. So big differences. Wow. Okay, so timing becomes a bit of an issue too, and the planning becomes a big issue up front.
And this is even if you have had a well-planned death and you've got everything in order. You say it still takes about 12 months.
It's still going to take 12 to 18 months, because one of the things a lawyer is always going to ask you to get is a clearance certificate. So as an executor or a trustee, I'm responsible for all the affairs of the individual. So what ends up happening is when I filed all the tax returns, everything is done. The executor is then going to apply for a clearance certificate. And what that is a letter from CRA that says, yes, we're happy with everything that you've done. And it releases the trustee from any further responsibility. Then funds are dispersed. Okay, so once I get that clearance certificate, and that can take some time. We are dealing with CRA here.
Yeah, yes. Okay. Well, and to be fair, it's their busy time of year.
Right now it is, yes. But it can take some time to get that, and that means that dispositions or distributions to the beneficiaries sometimes don't happen until that clearance certificate is actually there. It really depends on the estate and how involved it is.
But does CRA get their money first?
CRA gets their money first. It's, I go back to you'll remember the old days when they had the insurance company with the Freedom 55.
Yes, yes.
Freedom 55, everything is great. Government's very patient. They'll wait, but they'll get their money eventually. It's inevitable, death and taxes. So.
Right. So if you have to ask for one of those clearances then, and you have to prepare a final return if you're an executor or a trustee, is this something you can do on your own, or do you really need a professional's help for that?
I obviously recommend that you get a professional's help. There's two things one thing we used to do all the time, we used to tell our clients, somebody passes away, you call us, and then you call the funeral home. Okay, and the reason being is all that back history and everything needs to be in place to know what's going on. And at one point, CRA used to cut off our access to that information. Not so much anymore, but they used to. And it made things extremely difficult because nobody had the authority to actually look at the individual's tax history.
Because then everything is closed up.
Everything is frozen, yeah. Everything
okay.
is frozen up. So you'll find that it's a lot less stressful if you use the professionals and let them do what they do.
Right.
And that's the lawyer, the tax specialist, the investment advisors, the insurance specialists, all of them.
Because there could be all kinds of things that the person had that maybe you don't know about, and ways to deal with them and how to disperse them. Okay.
It's amazing how many times something shows up nobody knew about.
Exactly. Okay, Alan, we'll get all your socials and all your contact information up on our website at chch.com/morninglive. Thanks for the advice.
Thank you.